My apologies, and welcome to Sunday Night Futures Live. The markets are open, and we are up fractionally. But before we get to it, I want to talk to you about a little bit of a little story over the weekend. So one of our members, Talon, a dear member, a dear member sent me a box of brisket from Idaho. I mean, this Wagyu brisket. And funny story, I get all excited. I figure, okay, this is my thing to do this weekend. I'm gonna start from scratch on cooking this Wagyu brisket. And I'm all excited. I'm happy to do it. So I'm out Saturday morning while this is defrosting. I'm out getting rubs, the best sauces, et cetera, et cetera, et cetera. And only to come home, I get ready to start prepping and do my thing. And I realize that I just posted this, that it was already smoked and fully cooked. All I needed to do was wrap it in some foil to get it past that plateau point and bring it up to 160 right at the deep end. Perfectly done. Here it is, pre-cooked. You can see the glaze on there. Awesome. And here's happy old me. And here is the final product. It was absolutely delicious. One of the best cuts of meat I've ever had. Absolutely delicious. My dogs are in heaven. They had a piece. My son, he's bigger than me. He won't leave the side of the refrigerator. Both of them, him and the dog, are staring at the refrigerator right now. I got to put a lock on the refrigerator to keep them away from it. So, Talon, thank you very much. Very, very awesome. Deeply appreciated and deeply enjoyed. So, yes, to Franklin, yeah, definitely enjoyed dinner. So sorry for being late, and let's get to it. Let's say hello to folks. We have Mike out there. Mike calls on NVIDIA into earnings. I have zero problem with that. I bought NVIDIA common stock on Friday afternoon. Small position. If we get a retrace, because we had a weekly breakout on NVIDIA, if we get a retrace, I'm going to buy some more of the common. Pete, welcome. Sean, welcome. Meta, look at the daily chart, is upside potential and a down gap to fill. I'm more in the camp of the down gap. And I have to be honest with you. I'm in the down gap for the market as a whole because, we had about a 2% move on Friday through a lot of resistance levels. We hit a wall above because once we hit that 2% zone, we couldn't push further than that mark. So I think we need to get a little bit of a retrace, a little bit of the filling of the gap, and then perhaps we move up higher. The market is going to tell us. Happy Cinco de Mayo, everyone. Forgot to say that. Good evening to all. Anybody bet on the Derby? If Larry's here, I'm sure he'll share whether or not he bet on it. He's very much into it. I hit Mystique Dan and Sierra Leone with an exacta key box for $12.90. Now I need a good options play this week. I think NVIDIA upside calls is probably your best bet, especially if we get, let's bring up NVIDIA weekly chart really quick. Then we'll begin with the futures action. Here's NVIDIA, but on a weekly time frame. Look at that. You could argue that we broke out the week prior, and this was the retest. I believe in that. However, I still didn't want to bet my entire allotment of what I want to put into NVIDIA on that basis, because if I believe that the market is going to pull back, so might too early on NVIDIA. And if we get another attempted retest of support, I'm going to buy more NVIDIA stock. So I think that we are going to get a rally into their earnings. And you could probably buy SMCI as well. Another name that's looking good on a weekly time frame is Microsoft. Look at this. They've already reported they had great earnings, Two great bullish key reversal bars. It looks as though we are going to press up, breakout last week. Look for a retest of 400 this week. I'd be a buyer of Microsoft. Let's continue on. Amazon, yes, very close to all-time highs. We hit all-time highs a few days ago, and yeah, I'm in that camp as well. Franklin, I don't know, man. They just fly by, fly by. Yes, man. I got to tell you, I spent also. I got up like 5 a.m. on Saturday morning in preparation for cooking this. I thought it was raw. I thought I had to trim the fat. I didn't realize that it was already cooked. And so I'm watching YouTube videos on how to prep it, how to do this, how to do that. To realize it's fully cooked. But I still had to do some cooking. So I got a little bit of value out of that. But outstanding cut of meat. It's really, really good. Yeah, Mike, outstanding, man. Outstanding. Jody. And the rub that they used was amazing. Simple. You can tell it's simple. Black peppery, lots of salt. Trader Isaac, welcome. TZ Burton, welcome. Joel, looking for downside this week, but probably flat until VIX expiration. Okay. Yeah, I got a little bit overly enthusiastic about cooking, but I am going to do one. I'm going to cook one probably as soon as this is done. But I have a learning curve. I've never cooked one before, so I'll be leaning on Talon to give me some advice. All right, let's talk the opening futures action. And I'll give you my thoughts on where we go from here. Let's head over to the ES and begin there. And we are close to new weekly higher highs, but not quite there. We opened up, faded a bit. We're still up 0.16%. I have an alert set if we break out to new intraday higher highs, and alert set if we take out the after hours lows on Friday. Now, take note, stochastics putting in a lower high. So under a little bit of pressure. Let's check out the NQ. NQ also up 0.18%, but fading off of the highs again, lower highs on Stokes. It's a 5-minute chart. Let's keep it in perspective. Okay. Moving on to the Russell 2000. So this is very, very interesting to me. And I have a chart of the Russell up on our tabs of topics I want to talk about. And we have the RUT that's up over 1/3 of a percentage point and looking better than the large caps. So it looks like we're poised to move up higher. We're going to talk about a weekly and monthly chart of the Russell 2000 in a moment. Because we may just get some sector rotation here. But that all depends upon what happens to the 10-year yield. And the 10-year yield is up just shy of 1/3 of a percent. They took it down at the open. We have a bullish reversal bar, 5-minute time frame. Here's your 15-minute time frame, and this is in the books. We are now in our second bar. There it is. It just opened up. This is a very bullish setup for yields, not good for equities. Let's check in with the US dollar. The dollar was destroyed on Friday after the Japanese intervention in the yen. We may get a pop here. I don't think it holds. It all depends upon whether or not the Japanese intervention in the Forex markets is going to work. It's a mixed history of them doing this, but generally, odds favor yen strength. At current, we're down fractionally. Euro, which had a pretty good week last week, down fractionally. Yeah, it's funny he just said this. His talent just posted this. Yeah, I bought a sauce, a really good one, no fructose, none of that crap. And I put a little bit on a little piece of the brisket. I was like, it tastes 10,000 times better without the sauce. So I didn't even use it. I tasted it just to see what it would taste like. It takes away from the meat. You don't need the sauce. It was just outstanding. So that's the Forex market. Now, I suspect gold may be under a bit of pressure here. Not really. Gold had a down week last week. Now, we need to keep something in mind about gold. We're going to go to the macro chart of it in a moment. Gold was overbought. If you take a look at a weekly chart, perhaps even a monthly chart, we were leaning into the third standard deviation Bollinger Band. So you can't expect that to last forever. So we need a little bit of a consolidation. I think we're getting that now. It was a down week last week. Even with the dollar weak, you couldn't get a bid on the gold stocks. I mean, so it's just telling you if you can't bid gold stocks with a weak dollar, it tells you there's more consolidation to come. So not a big deal. So very bullish on the gold stocks and gold and silver, platinum. Let's check in with silver. Silver up about a half percentage point. Okay. What else do we want to look at in the commodity space? Energy. Natty Gas. Wow, Nat Gas had a great week last week, moving up 1.68%. We spent a lot of time talking about natural gas on Thursday Night Stock Charts Live. Friday, it had a ripping day on Friday. So the continuation rally is on for natural gas. Bullish, very, very bullish on natural gas. The good part about natural gas is that if you're looking for an uncorrelated asset, so let's say you're heavy into the S&Ps or the Qs, those two are two very tightly correlated assets. Uh, as a premium seller, ideally you have uncorrelated assets so you're diversified. Natural gas is pretty much correlated to itself. It really doesn't care about any other index other than itself. So it's great to have as a position. The problem is you got to stay small. It's a widow maker. It treated us good last week, and I bought some futures on it, and it paid off. So it's looking good. I think that natural gas is gonna move up higher. We're out of that trade. I book profits. I'm not making money here right now. Let's take a look at oil. Oil, which had a poor week last week, up nearly a half percentage point, along with nat gas. Energy is moving up. Live cattle. Here's the weekly view. I think that we're going to get a retest of the breakdown point. Live cattle, believe it or not, is now in a downtrend. I think this fails. We may move up higher to do a retest of this breakdown point, and I may sell short some futures here on live cattle with a tight stop. You got to use a stop with futures, or else you're doomed. Yeah, that's my take. I'm sticking to it. Now, last week was a huge week for agriculture, corn. Very good week last week. We are leaning into resistance. Might we break out? Sure. Soybeans, beautiful breakout last week. Perhaps a little bit of a retrace back down to this 20-period moving average. Let's look for a continuation breakout. Wheat, getting ready for a continuation breakout. We've been talking about this for a few weeks now. So as I say this frequently, but it's important. We do this every Sunday night because we don't want to wait for next month's CPI report. We don't want to wait for next month's PPI report. We don't want to wait for next month's PCE report. I want to know what inflation is doing now, right this very minute. And this is how we do it. So that way we're positioned appropriately when those reports get released. So we're seeing weakness in energy, strength in agriculture, but overall, I'm going to go to the chart of the CRB commodity index in a moment. Prices came in last week. Net, they came in. Energy led that charge. The question is, does it continue? What else do we want to take a look at here? Dow futures. Oh, you know what? Copper. Copper's been in fuego. Very nice move here on copper. Bitcoin potentially, not potentially, Bitcoin is broken out on the week at current. Right? Is this week's? Yeah. This is current price action. Watch for a pullback here on Bitcoin. Ugh, I always do that. I don't blow, Bob. Okay. Interesting trade setting up here, but not yet. Not yet to the long side. I want to go back to cattle for a moment. That's better. That's better. Okay. Okay. I think we did everything we need to do here. We have a squeeze forming on the dollar. This is probably going to get resolved up. We're probably going to get some weakness on gold later on, but that's okay. That's an opportunity. Is there anything I missed? I keep feeling like I missed something. Oh, platinum. Platinum broke out last week. Here's the weekly chart last week. We're going to do a retrace this week. We have a squeeze firing off on platinum. Okay. Very good. Okay, let's get to it. Let's go to comments. Talon, you have no idea, dude. You have no idea. I haven't tried the sausage yet. I'll probably cook them up sometime this week, but it was incredible flavor. Just the smokiness, the flavor. It's a simple seasoning they put on it, but they just did it right. Really, really amazing, and an excellent cut of meat. Wow, my God! I watched more YouTube videos this weekend about that. Wow, at yields might be realizing that Powell said essentially nothing. Not necessarily so, Joe. What he did say is this: is that the markets didn't hear it. I don't think they did because they sold off. What they heard is and like a head fake towards you're going to see a rate hike before you see a rate cut. Not true, because what he did say, and we went over this on Thursday night, is that the rate of distribution of debt off of the Fed's balance sheet is going to get reduced by about $37 billion per month. That's a lot of money. So what that means is that he's not going to take supply and put it onto the market. So what does that do? It's less supply. It keeps yields lower. So it's kind of like a stealth cut in a way. He's not flooding the market with treasuries like he has been for the past 2.5 years. So that's coming to an end first, and then they're going to go to the cuts. But they need an event before they can go to the cuts. Right now, we're going to go to the CME Fed Watch tool in a moment. Maybe it's changed, but right now it looks as though September is the month they're going to go. Hey, Bob, can you please look at CrowdStrike? Why such a huge dump on Friday close? No news? Or we'll take a look at it, Dame. I didn't see that. All right. CRWD. CCO. Okay. Mike C. I love Southern Copper. Great company. We'll go over the chart in a moment. Hey, Bob. I thought Beyond. I bought Beyond and hoping it. All right. Can we review? Yeah, we can go over Falcon. I believe there's a lot of shorts in that name, so we'll look to see whether or not there's a setup there for Beyond BYND. Okay, you got it. Okay, let's get to it. Let's talk about the week that will be, God willing. And first, I want to talk about the utter grift, if you will. The guy you're going to be listening to for a moment, and it's kind of cringeworthy. This guy's name is Jared Bernstein. He's been around since the Clinton years as a economic stooge for the most part, a talking head out of academia. And he gets asked a very, very simple question, which he simply cannot answer. Let's say hello to Jared Bernstein, who is a political hack posing as an economist.
So
how do I get?
Yeah, I guess I'm just I can't really talk. I don't get it. I don't know what they're talking about. Like,
let me try to get this restarted from the beginning.
Government can't go bankrupt because we can print our own money.
Like you said, they print the dollar. So why does the government even borrow?
Well, I mean, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Since they sell bonds and people buy the bonds and lend them the money. Yeah, so a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, yeah, I guess I'm just, I can't really talk. I don't get it. I don't know what they're talking about. Like, cause.
Okay, we get the point here. This guy's the economic advisor to our current president. He's been an economic advisor to multiple presidents. He's on TV constantly pretending that he knows what he's talking about when all he is an absolute show. This is what's running our monetary system right now. These people who have absolutely no idea what they're doing. And if they do know what they're doing, it's nefarious behavior. Right? It's scary, isn't it? Correct. The fractal banking system, fractional banking system. Correct. LOC did an offering of $5, which even GM made an investment in the company. Okay. I can't really speak to it because fundamentals is not my bag. I don't sit in the boardroom. Therefore, if I don't have inside knowledge, I know nothing. So that's my position when it comes down to any deals like that, for earnings, for quality of stock relative to peers, relative strength. I outsource it to IBD, Investors Business Daily. I don't know what's scarier. Yeah. In my opinion, he's nefarious. Yodi, absolutely right. Okay, let's move on. Coming up this week, it's not a huge week for economic data. So the vibe I get is that the lack of economic data is going to allow this market to fill a gap, I believe, and then press up higher. That's my guess. Now, to be fair, while I did some buying on Friday afternoon, I covered all my shorts on Thursday. By Friday, on that rip up, I opened a new position short of the market. So I reopened that hedge, and I was using a leveraged ETF product. So that 2% move would have actually been a 6% loss if it would have carried it. So I got the shares back at 6% less or more. Yeah, 6% cheaper than where I sold them on Friday. So we have a new short position. I will take that short position off on a filling of a gap. That's the goal. That's a strategy. It's not a bet that we're going to break support. If we do, we'll lean into the short side and close out some longs. It's okay. Either way, it doesn't matter to me. So a lot of Fed heads coming out. They're going to be out on Monday. So these guys, you never know when they're going to throw a curveball to the market. So beware. We can get volatility. Most of the time, nothing happens. Just beware. Just beware. Wholesale inventories coming out on Wednesday, not a big one. Thursday, initial jobs claims. Not much in terms of economic data. Consumer sentiment, 10 a.m. on Friday. So pretty much a week of Fed heads coming out. So the markets, after Jay Powell spoke on Wednesday, the CME Fed Watch tool, the expectations for a rate cut dropped precipitously. That all changed by Thursday afternoon. And while September was completely out of contention for there being a rate cut, it was well down below 50%. We are back above 60%, nearly 70% probability of a cut. July, I still believe, that's don't think about July. November, 80%. December, 90%. They're going. It looks like they're going to go. Now, the only thing that could prevent them from going is extremely strong economic data and inflation data that puts them back on their heels. So the problem is this, that to cut rates with historically low, even though it rose last week, historically low employment numbers, unemployment numbers, non-farm payrolls, pretty good, and GDP above 3%, that's all due to government spending. For them to cut, they need a reason. There's got to be a reason that they go. And the problem is it's going to need to be some sort of an event that takes place. What's it going to be? I don't know. Regional banks, not sure. I'm not that smart. I don't pretend to be. Now, looking at revenue growth this quarter for the S&P 500, SPX is reporting year-over-year revenue growth of 4.1% for Q1 2024. Good stuff, which is above the estimate of 3.5% on March the 31st. Very, very good. How is that translating into earnings, though? Is the market cheaper this week versus last week? Well, let's take a look. No. We have a PE multiple of 34. We are creeping up towards the October 21 highs of 38.58. So we can, to get up there, we need to go on to new all-time highs in the equity markets. It's quite possible given the anticipated rate cut in September. Add to that, we'll go to seasonality in a moment. We're heading into a seasonally favorable period of the year. Earnings this week. We're heading into a time of this earnings season where we get mostly mid caps now, small caps, some lingering large cap names. After the bell on Monday, Palantir, Lucid. Before the bell on Tuesday, Disney. That's going to be an interesting one. Crocs, Ferrari, Nikola, BP, some energy stocks, Rockwell, Rivian. So a lot of these EV plays coming out this week. Watch Tesla, Win, Twilio, Uber, Shopify, Hood, Airbnb, AMC is going to be interesting. Beyond Meat, they report this week. Be careful. We'll look at the chart, but be careful. They report this week. Duolingo, they report this week. Great stock. I use the product, learning Italian with it. Warner Brothers. We slow down on Thursday. Enbridge, not much after Wednesday to move the market. Not much to move the market this week. Disney is going to be probably the most interesting one for me. Okay. So I should have brought the, this is the Buffett indicator. for the valuation of the equity markets. And this is Charles Bellio, and he points out U.S. stock market capitalization. Again, this is the Buffett indicator of capitalization as a percentage of GDP. In 1984, it was 42% of equity markets, the stock market, as a percentage of GDP. 1994, 63, 2004, 93, 2014, 114%. At current, we're at 187% valuation of the size of the stock market relative to GDP. So that brings us to Grant Cardone. I'm not going to open this up because typical of Grant Cardone, there's an ad in here that he's trying to sell his products with. We're not going to fall for that, and I'm not going to be a show for him. So, but he's not wrong here in the opening passage. Warning, stock market is due for 50% correction. You know, that could be a little bit of hyperbole there. So let's take that as it is. Tens of millions of dollars. Let's skip the hyperbole. Here, this is not inaccurate. We talk about this all the time, but now it's getting acknowledgement. The yield curve has been inverted for 500 plus days. This has only happened 3 other times, and those 3 times there was a stock market crash. So where do we stand at current on the yield curve? Last week we closed right at resistance. No breakout. But I could bet I could promise you I am going to be watching this with bated breath to see whether or not we get a breakout here on the yield curve. This is not a scary chart. There's another scary chart that you should be very, very concerned about, and that's the monthly view of the yield curve. And this monster is ready to take out last month's highs. So once this thing starts getting going in the wrong direction, meaning up, steepening, it means a lot of problems for the equity markets. And I can assure you that if, in fact, we do put in new monthly higher highs, and God forbid we take out the highs of January, or even worse, that of October, that'll probably mean an uninversion of the yield curve. And what that's meant in the past, for those that are not familiar, is that things get real fast in the equity markets. I know for those of you that join here every week, I go over this every week, but there are those that have never heard of this. So it's important that I go over it so they're aware of the environment that we're in. This is the same chart, monthly chart, yield curve, just a different look. This goes back to 1995. And what it brings into view is the steepening of the yield curve in Candlestick. In gray, we have the S&P 500 overlaid. And you can see that when the yield curve steepens, and in particular uninverts in this gray zone, the stock market, the S&P 500, rolls over and rolls over hard. So that's 2000. Here's the financial crisis. On inversion, equity markets rolled over. Fast forward to, this is the taper tantrum. Actually, no, I'm sorry. This was the taper tantrum here. Here was the COVID crisis. And right now we're in the everything bubble. Fiscal deficits through the roof, government spending through the roof, fake money getting printed into existence, and all that money is going overseas. No rebuilding here. None. Not happening. Everything is being offshore. Our wealth is being stolen and shipped overseas. I'm not going to get political with you. Agree with it, don't disagree with it. Our wealth is being printed into existence and stolen, gone overseas. This is the reality. So, can the equity markets continue up higher from here? Yes. Yes, they can. As long as we do not get a steepening of this yield curve. But this is a very bullish chart. The probabilities of a move higher are very, very high. But there are great powers that are out there that have their vested interest in not seeing this yield curve steepen. You know how many congressmen out there that are invested in the stock market? Not that they have any idea what the yield curve is. Trust me, they have no clue. CRB commodity index. This is the reason why the equity markets can continue up higher. The CRB commodity index, this is a basket of commodities as it sounds. So what did they do last week? Down 3.5%. That is bullish for the equity markets. Why? It's because it takes the pressure off the Federal Reserve. This is a glimpse into what the CPI report is going to look like next month. It's a glimpse into what the PPI and the PCE reports are going to look like next month and how they viewed, how inflation in May was viewed. If this is pulling back, it's bullish for equities. Not so bullish for equities. So, yeah, let's go to the Post. Yellen is scared out of her effing mind about the reverse carry trade. Let me pause there. So the reverse carry trade, this is to be successful in stock trading. You don't need to know what this is, okay? All it is, it's arbitrage. So the carry trade is when you borrow in yen, and at the yen, you have zero interest rates over in Japan. And what do you do with that money? Well, you buy equities in the United States, or you buy treasuries in the United States. So you're borrowing at zero, then you're lending on treasury at 5%. How can you go wrong? Right? It's free money. The problem is when the yen starts moving up, yields start moving up over in Japan, then you get the reverse carry trade. That money begins to get repatriated back over into Japan or whatever currency you're borrowing in. But Japan is a big, big market. So if that carry trade gets reversed, that means that equities here come under pressure, or they can't move up as high. They can't move up as high as we would like them to. So will it happen all at once? No. Right now, the gap between yields over in Japan and the United States is still very, very wide. You can still make money on the trade. However, pressure is being put on them to repatriate some of that money. So it's beginning. It's not a calamity yet. It's beginning. If the BOJ, Bank of Japan, continues to prop up the yen, continues to raise rates, then that trade becomes not too good for U.S. equities because you're losing a big buyer. Especially in the treasury market, you're losing a big buyer. So that's what he means about Yellen being afraid, because the Japanese are now intervening in the equity, in the forex markets, and they've already begun to raise rates for the first time in 20 years. So we don't care about that. We just want to be aware of it. We're not going to do the carry trade, right? But what benefits? What benefits in this environment where you have the 10-year yield pulling back, even with the reverse carry trade? That's good stuff. And the promise that the Federal Reserve is going to drop less debt onto the market, so that may offset some of the reverse carry trade out of Japan. That's bullish for equities. What does well in an environment where you have yields pulling back, you have the dollar pulling back? What's the shot? What's the trade here? Well, I think that we got to take a look at small caps. Small cap stocks are currently trading at their lowest valuations compared to larger companies since the early 2000s and the 1970s. It is not coincidental that commodities, emerging markets, value stocks, small cap equities typically excel during a secular bull market in gold. We are in that secular bull market. We are likely experiencing other significant inflection points where small caps are deeply undervalued and positioned for strong performance in the next decade. Yes. Does this mean you go jumping all in on small caps now? No. Dollar cost average in. Why? Why don't we want to put all of our money in our basket right now and bet that small caps are going to take off. I mean, look at this chart. Look at the chart. Beautiful, beautiful chart here, weekly time frame. Beautiful cup, beautiful consolidation. Let's go to a monthly chart. What could go wrong here? Here's the monthly chart. Beautiful base being built. You got to love it. If you're not going to put a stop loss in under your small cap position under 189 per share on the IWM, assuming that's a small cap index or ETF you want to buy, don't go all in. Don't do it because there's a good chance you're going to get burned. Why? We already spoke about it. The yield curve. If this takes off, this is going to take it on the chin, just like everything else is going to get hammered. But therein lies the buying opportunity. Now, in terms of what else is going to do well, gold pulled back, even with declining yields, declining dollar, pulled back last week. But this is a weekly chart. We were very, very overbought. That geopolitical risk came off the table. Israel, Iran, they did their tit for tat. That's pretty much in the rearview mirror now, unless that sparks up again, quite possible. But you're getting a pullback now. Now we're looking for a consolidation on gold and then a subsequent breakout. And we'll be adding more on that breakout. We're not there yet. What else does well in an environment where yields are pulling back? Emerging markets, dollar week, yields pulling back, emerging markets. If you overlay a chart of emerging markets relative to the US dollar, we'll put it above, we'll make it green. You could see that at current, there's a correlation, but historically, they trade inversely. Let's go to a quarterly view, just to drive home the point. They're deeply, deeply uncorrelated. So as the dollar pulls back, emerging markets rip up higher. So you need to be we own EMXC. This is emerging markets ex China. I don't want to be invested in China, although it's doing well now. Last week, FXI, how did that do? Up over 5%. So they're coming out of their bear market there. A little bit overbought. What did Baba do last week? I was going to buy calls on this. Yeah, I missed the boat on this one. But you can buy this on any retrace if you're so inclined. What else does well? Utilities. Declining yields, utilities do well. Take a look. This is a leveraged product 3 times. So divide this by 3. So the utility space was up around 3 1/3% last week versus the Qs, which were up only 2%. Now, what I think is going to happen here on the Qs, and we started off with this earlier, and I mentioned that I did some buying of NVIDIA on Friday. I also did some buying of Morgan Stanley, my dad's favorite stock, Morgan Stanley. I think he's owned it for like 20 years. And Morgan Stanley, a beautiful, beautiful Bollinger Band squeeze forming. I put on a small position there. I'm going to add more because I believe we're going to get a retrace this week to fill these gaps that opened up. That's a good thing. So Qs, we bought some stock. However, we did lean back into the short side to take advantage of the filling of the gap. I'll close out that short on a fill and a reversal bar to make sure that we hold support. And if we break support, we'll lean into the short side. Simple as that. Let's bring up a chart of Morgan. In fact, let's bring up the Bollinger Band squeeze chart, Bitcoin. I have a saved format here. Let's go to a monthly chart because Morgan Stanley looks like it wants to rip through the ceiling. So here's a Bollinger Band squeeze on Morgan Stanley. Look at this W formation. In black, you have the Bollinger Bands. In gray, you have the Keltner channels. I think I went over this on Thursday night as well. Last time this happened, we doubled. Before that, we doubled. So usually when we break out of these Bollinger Band swings, we double on Morgan Stanley. So very, very good looking setup here for Morgan. And we are bullish. We are long. I'll be adding more this week on any pullback. Now, I want to talk a little bit about Starbucks. I actually had my first cup of Starbucks today just to go in because I plan on trading this in the coming days. Now, I'm not going to go into earnings on Starbucks, but let's just put it this way. They were bad. They were the nuclear holocaust of earnings. It was bad stuff. Adjusted for inflation, they are contracting. That's how bad it is over at Starbucks. So on a daily chart, as a contrarian, we have, wow, they're yielding 3% now. But this is going lower. We have RSI on Starbucks at around 18, just below that. So it made it onto our watch list. The question is, does it go lower? I think absolutely this is going lower. Now, I have an infographic below. If you are contemplating trading this stock or any other extreme oversold stock, link below. It's free. Use it as a roadmap, a rudimentary roadmap to entering these trades. You must add in increments. It's the only time I condone averaging in or down on a trade. You must make the assumption on extreme oversold stock that your first buy is the wrong buy. You need to stay very, very small. Accumulate, nibble, nibble, nibble. That being said, you also need to know, and this is the big mistake that a lot of people make. They look at this chart and they say, wow, S&P 500 stock at Starbucks, great company, yielding 3%. It can't go any lower with an RSI below 20 because technical analysis for dummies told me that if I see an RSI go below 30, well, I got to buy it because that means it's oversold and it's going to go up. That is the dumbest rule of thumb I've ever heard in my life. Never, ever, ever go by that rule of thumb because just when you think they can't go lower, they do. What you need to do is take a step back. If you're a day trader and you look at a 15-minute chart here, you're going to lose your shirt. You're going to see great setups, and then all of a sudden they fail. You're going to see it pop up in the morning, and by the end of business, fade. That's what these stocks do. Get ready for it. Don't be surprised to see this thing move up a percentage point tomorrow morning. What's it probably going to do? It's going to break down to new daily lower lows. Don't get suckered in. What must you do? What must be the pimp Mac daddy of everything that you do with this stock? Wait. We are small money. They like to call us dumb money on Wall Street. I didn't make it up. I'm a member of that group. I am dumb money, just like you. Okay? We do not have the capital to move this stock. So if we don't have the capital to move this stock, what must we do? The logical thing. We need to look where there are buyers of like mind. But how do we find those buyers? Well, we look at not a daily chart, not a weekly chart. We look at a monthly chart. And then we take our crayon out and we look and see, okay, where do we have support? Where do we have resistance? I think that this stock is quite possibly what I came to a conclusion yesterday. I'm targeting between $64 and $67 per share on Starbucks. We closed out the day at $73.11. Now, you can see that we broke down below support last week. They're probably going to rally this tomorrow morning. I would not be a buyer. If you're going to buy it, so be it. If that's the bottom, I'll lose out on the trade. I'm not going to chase the stock. I will only buy this stock where I have buyers of like mind, and that's at these support levels here. And I believe that TrendSpider picked it up as well. 35% discount code below if you want this automated SBUX. Yeah. So right here, I have the alert set. We smashed through in this dotted line here in blue. We're looking at a monthly chart. However, we overlaid quarterly support, now resistance as well. We closed down below quarterly support. We closed down below monthly support, but the month is still early yet. Next price target down at around the mid to high 70s. So this is why you need to average in, nibble, nibble, nibble. But we're not at the bottom yet. We're not at the bottom yet. That I'm very confident about. So patience, members, of course, we'll be watching this very, very closely. Read some analysts that puts SBX fair value at 55. I was watching Michael Knoll. He's an options trader. He's on CNBC quite a bit on Friday afternoons. He had his Bloomberg up, and on a relative basis, it's priced historically low right now. Not that I'm a fundamental guy. This is a short covering rally for me. This is not an investment. So ultimately, might it head down there, Joel? Sure. But what we're looking for here is a trade. So we're looking for buyers of like mind at strong support levels. I'm thinking the mid to high 60s. That's where we're going to go. Ultimately, might that be the fair value where it arrives? Sure. What do I know? We'll revisit it back then or when it ever gets there. But that's the trade that we're looking at, mid to high 60s. Okay. CVS, I did some analysis on CVS over the weekend as well. My price target there is $50 per share before I got involved. So we closed out the week at $67.71. So that's a pretty steep drop from where we're at. Maybe we'll find support at 65. I'm not in love with this trade, so I didn't spend all too much time analyzing it. I just came about a quick support level, and I think that it's right. Yeah, right here. Sorry. I didn't even see this. So we closed at 55 and change. Yeah, I think we have another $5 in downside right around here. Only a little bit of sensitivity. Okay, so our watch stocks for this coming week are Starbucks, CVS, and SPT. SPT, RSI here on a daily time frame. Is at around 11, but I think we go lower before we pop. I think that we go down to around $25 a share. There's a huge short interest in the name down there. So this is one that I'm going to be eyeballing pretty carefully. It is optionable, but the spreads on the options are like you could drive a truck through them. So I'm not going to trade options. This will be a common stock trade. I'll probably do options on Starbucks. I'll probably put on a call spread on Starbucks. I haven't looked at the options on CVS yet. Probably use the common stock there. The shares are pretty cheap, and the spreads on CVS options are probably pretty wide as well. So that's the game plan moving into the new trading week. Let's do some chart requests. Let's first talk about seasonality going into the spring. Seasonality. the month of May, one of the better months out of the year. June, a little bit volatile. And then it's like a steady eddy through the summer. Then, of course, September hits. Oddly enough, when are they expected to cut rates? September. What happens when the Federal Reserve cut rates? Stocks go down. They don't go up, they go down. That's historical fact. So my guess is that short term we move up higher, but I'll be watching that yield curve very, very closely. And if that starts moving up higher, they may drag forward expectations of a rate cut because they see something out there. So that is SPY. Let's do some names. CRWD. The monthly chart here looks rock solid, but the month is not over. It is not in the books yet. The weekly chart is. Somebody said that this closed down after the bell. Or in the afternoon. In the after hours session. I always look at volume. Oh, is there news first? No news. So then you want to take a look at the volume. So it dropped down here. How much volume? Where are my volume bars? My volume bars are gone. I would look at the volume. I don't know what it is here. It's missing from this chart set. I would look at the volume. If it's light volume, I wouldn't worry about it too much. Not much happened after hours. So it looked like there was some volatility. I wouldn't worry about it too much. Probably going to pop back. So CrowdStrike, we closed down on the week. Maybe get we recaptured support. Maybe they're going to retest 306, 305 per share. I'd be a buyer off of that support level. I think they come out with earnings soon, or have they already come out with earnings? If they haven't come out with earnings already, I would not buy this stock. I would wait till they report earnings. These stocks, if they miss lately, they've been getting destroyed. Look at Starbucks. Daily chart. Looks good. I mean, the resistance above here, a lot of overhead supply. I would buy the pullback between 305 and 300 per share. But watch earnings. I would not do it if earnings have not been reported yet. SCCO, great company. At resistance, I would not be a buyer here. Monthly resistance above, we've stalled out. No new monthly high yet. Down week last week. Watch for a retrace on Southern Copper. We had a failed breakout last week. I would watch for 107.70 per share as support. Daily view. I'm not a buyer here. It's struggling. I'm not a buyer. Great company. I would also check out the correlation between Southern Copper and the spot copper price. If copper breaks out and there's a high correlation, maybe you want to nibble now. Maybe you'll get some follow through, but I'm reluctant. I'm reluctant at this point. BYND, they report this coming week. We had a breakout last week. Let's go to the weekly chart. Beautiful chart. Horrible products. Beautiful chart. If you're going to buy it, no matter what, watch for a pullback to $7.70 on Beyond Meat. That's a retest of support. We have a lot of overhead supply above. I would bet on the pullback. if you believe as I do that we're going to fill that gap that opened up on the SPY, QQQ, etc. last week, you're going to get a pullback here. This is not a best of breed stock. So if the equity market's overall pullback, so will Beyond Meat. Buy at the filling of the gap. Well, there's no gap here. Buy at 770. That's a retest of support. Consult your financial advisor. Do I have anything in the members area? Guys, I've been asked about joining. Membership is right now closed. We have a little bit of a technical issue with the membership software. All right, so Jeff, BYON. I think we did this one the other day, but we'll go over it again for Jeff. Yeah, we did. Beyond. Nice move on Friday at resistance. So this is a breakout. You're probably going to get, let's go do a 15-minute view here. Yeah, we're right at resistance. I would buy a pullback if you get down to around $21.22 per share. I'd be a buyer down there. I'd buy the pullback. I think you're going to get one. Again, the thesis going into the new week is that we're going to get a filling of the gap. All right, so here is whatever, small caps, IWM. They gapped up. I think we fill this gap. Just a retrace. So on any pullback, I'd be a buyer there. And if they fail to hold last week's lows, get out quickly, because that means the entire market is in a heap of trouble. We'll leave it off with a couple of more. And I'm going to leave it off at Hood. We'll do Hood, IoT for Joel, and Hershey for Jody. Hershey, they announced last week, I believe it was Friday, beautiful breakout on the week on Hershey. Let's go to a monthly chart here. This stock has been walloped. I want to see the yield. My internet's so slow tonight. 2.42% yielder. So monthly chart at current, we're flirting with a breakout. Way too early in the month to make that call. Daily chart, weekly chart. We broke out last week, looking good. We did it on volume, very nice. So whatever they reported, the street liked, daily view. They tried to take it down. They reversed it up on earnings. Bullish on Hershey for the first time in a long time. IoT. I don't know this company. Samsara. Beautiful chart. That's a quarterly view. Monthly view, we are breaking out. Weekly continuation breakout. This is a perfect case in point of what you're looking for, a retest, right? We broke out the week of the 22nd. What did we do last week? We pulled back, retested. What was support or what was resistance is now support. This is like catnip to technicians. We love this. So where else did you see a chart like this? NVDA. Same deal. Same exact setup. Beautiful setup. All right, last chart up for not GTN, Hood. Hood. Hood broke out last week. Actually, broke out the week before last, to be fair. Broke out, did a retest, follow through. Bullish. Daily breakout, a little bit of resistance above. You have a Bollinger Band squeeze on here too. Bollinger Bands are trading inside the Keltner channels, setting up for a potential squeeze. I would check the short interest here. And you may have a short squeeze on your hands. That's it, folks. Thanks for being here. And Callan, thanks again for the awesome brisket gift. Awesome, delicious. Enjoyed it. And everybody have a profitable trading week. Have an awesome night. Thanks for being here. Happy Cinco de Mayo, and I will talk to you soon. Be well.